Ladies and gentlemen, Investor Talk is back today with an update. Jorge Ganosa is there in Florida. Welcome, Jorge. We had important numbers recently, a lot to discuss today. Nice to see you again.
Hello, Jan, and thanks for inviting me to your program again.
My pleasure. Let's come to Mexico first. You got it completely right. The decision was taken in your favor. The court ruling published at the 14th of March. Now you have a permanent injunction granted, and I think that means it's all set now with San Jose.
Well, it was an important decision by the Mexican court system. We are still waiting for a final ruling. That final ruling, which is basically the court and the judges assessing the merits of the case, that can take between 1 and 2 years. What this injunction provides is protection to the company while the court reaches its final decision, which again can take 1 to 2 years. So it is very important. We continue. The court has said through the injunction that we can continue working under the 12-year environmental impact study that we have in place, and we can work under that study until they reach a final decision, which we are of the strong opinion it will be positive as well. I mean, there's always an element of uncertainty when you're in court, but I believe receiving the injunction, the permanent injunction, is consistent with our view of the case, right? Just as a reminder, we presented what's called the nullity trial against the actions by the environmental agency against our permits. We presented and the court received it. The court found merit on our arguments. Then we asked for an injunction and the court granted what was a preliminary injunction, a temporary injunction, while they assessed the merits for a permanent injunction. And after a few weeks, the court moved to grant the permanent injunction. It has been difficult with Semarnat, which is environmental agency in Mexico, over the last couple of years, since 2021, September 2021. It's been really troubling to us to see repeated attempts to alter our environmental impact assessment. And it has been also very refreshing to see that whenever we appeal to those attempts with the Mexican court system has ruled in our favor. This is the second attempt by the Mexican environmental agency, Semarnat, to alter or affect our permit. The first time we prevailed in court, and now they're coming again with another, attempt. And we are of the strong opinion that we have an excellent chance to prevail again, right?
At least, Jorge, in some countries the court system seems still to work. Let's come to the financials and to your press release that shook some investors, but we have a closer look. Here is your press release from the 15th of March, and it shows here a net loss of 160.4 million for the quarter, and for the whole year, 136 million. If we continue reading, that was because of write-downs at Yaramoko and Lindero. Please explain it to our audience.
Yes, we had a non-cash impairment charge, as we put there in the second bullet of the news release, net of taxes of $164 million in the fourth quarter. For your audience and those with a non-accounting background, we test for impairment indicators every quarter along with our auditors. And we had, in the case of Yaramoko, Lindero, and San Jose, we identified impairment indicators, so we ran the impairment test. What's an impairment test? It's basically looking at the book value of the asset against its projected cash flows. But remember that this is an ever-depleting business, and that story of the moment changes, right? In the past, Fortuna has taken impairment charges, and we have also taken impairment reversal charges, right? So you can have an impairment and you can also have a reversal of the impairment. So in the case of the Yaramoko, we took the largest impairment there. The impairment was driven, one, by cost inflation, no? It's across the business and industry. Second, the loss of ounces that we declared at the crown pillar recovery. And also the fact that through the acquisition of Roxgold, we had to allocate a lot of the value of the acquisition in different pockets, no? Séguéla, Yaramoko, and we placed about, $40 million of exploration value to Yaramoko. In the impairment testing with the auditors, we see if that thesis is being, materialized with exploration success. And we also had a write-down of those $40 million, which is, again, a non-cash charge, right? So based on inflation, the loss of ounces in the crown pillar, and the purchase price acquisitions, of 2021, we took a write-down of close to 100, that was the largest impairment. Then Lindero, also some cost inflation, a higher discount rate led to the impairment at Lindero, inflation on OPEX and CAPEX. Lindero has a long life of reserves, 13 years. So when you increase the discount rate, it also has a large compounded effect over the life of mine. So the combination of those two, higher discount rate and slightly higher cost on OPEX and CAPEX, led to an impairment charge, a non-cash impairment charge. And last was San Jose. At San Jose, we have been investing in exploration at the tune of $9 million a year. And those $9 million a year of investments have been capitalized as investments. And our success with exploration has been marginal to date, no? So based on the amounts that we have invested and the reserves that we've been able to get and bring into the life of mine model, there is a gap, and we had to write down those investments, right? So these are accounting adjustments to book value. And if we have exploration success or political situations lead to a lower discount rate, or world conditions lead to a lower discount rate, or some deflation comes, at some point, all of those things can be adjusted, right? But these are non-cash charges. What drives the value here, Jan, for the business is physical metrics, ounces and cost. And our ounces and our cost in 2022 were in line with our budgets. Exploration, when I look at the West African business, yes, we did lose some ounces in the year. But again, when I look at the West African business, since 2021, when we closed the Roxgold acquisition for the business in West Africa, to where we are today, we have expanded the ounces in West Africa by around 17-20%, in spite of losing ounces at Yaramoko. The global West African ounces for our business have expanded by close to 20%. Impairment charge is a non-cash adjustment on book value, and it's never desirable. I'm not going to sugarcoat it, but the true measure of a business, free cash flow generation, getting the gold that we said we would at a cost that we said we would, all of those metrics were met, right?
Right. Let's come from the non-cash items to the cash flow that you just mentioned, and that looks really good. Here also from your press release, and if we go to the net cash provided by operational activity, then we have for last year 194 million, and 2147 million you gained in operational cash flow. And this is the means or the measure that shows how a business works and that it is creating cash flow. And with that numbers, I think you can be really happy.
As I just explained, Jan, our business is running well with healthy margins. In 2022, we met our guidance for production ounces. Our mines were in line with cost guidance as well, with the only exception of the Lindero mine in Argentina, which came slightly above guidance. But again, for the year, the all-in sustaining cost for that mine was $1,142. Just as a reference, the World Gold Council, if we use the World Gold Council figures as a reference, up to the third quarter of 2022, we'll likely see the fourth quarter figures published soon. The median for global gold mine supply, the median all-in sustaining cost, was close to $1,300 per ounce, right? That figure 8 quarters ago was $1,000, right? So there has been certainly margin compression across the industry. We have not been immune. But in spite of that, as we shown and you're pointing out, our business continues generating healthy free cash flow.
And while you create this cash flow, Jorge, we have not to forget that you had your Seguela construction, and that also requires a lot of cash. I have here your quarterly report. If we have a look here at the investing activities, we have 251 million, and I think most of that went into Seguela, 100 million more than in the previous year. And for that reason, your operational cash flow was not completely sufficient, but you did not take any other loans, so you completely financed the new mine out of the cash flow, more or less.
Yes, I mean, with cash flow generated by operating activities plus our existing available credit facilities, we're well more than adequately funded to meet the capital requirements of the business. And not only Seguela is certainly a large component of that, but our mines demand close to $100 million a year in sustaining capital, right? Our operating assets demand a significant amount of money on sustaining capital investment, right? So, yeah, Seguela construction, this in 2022 was about $107 million of capital, and plus another 100 on the other mines' everyday requirements, right? Capital intensive business.
But Jorge, I can imagine that to start such a mining venture, to build such a new mine now, would cost even more. I think you are quite happy that you started or you decided this 2 years ago. Right now, to start that would be difficult to calculate with all the inflation and supply chain pressures, and now you are nearly through it.
Yes, the construction is basically complete. We are by now 95%, 97% complete with the construction of the mine. And most of the activities on site at Seguela revolve around commissioning, operational readiness. I was at the Seguela site in the Ivory Coast 10, 12 days ago. And I had the opportunity to observe the commissioning of the first conveyor belts. Next week, we're going to initiate commissioning of the crushing equipment. We are on time, on budget, which is rare for this environment in the mining industry to deliver a project on time, on budget. So we're on time, on budget for delivery of the mine in production with first gold, hopefully in May.
Yes, you just said you are now 95% complete. How much money is the rough guess would you still need to complete the mine? Because once done, your free cash flow will increase significantly.
Yes, this, we have probably some 20 million, $25 million to go with commitments we have there. So it's an inconsequential figure for us right now. This is a flagship asset for the company. It would be not only meaningful production, but delivered at low costs with long life of reserves and very exciting exploration potential in a country that it's a good host for mining investment, right? We're very excited, and for 2023, we have provided production and cost guidance already for Séguéla. Our consolidated gold equivalent production for 2023 is guided at around 450,000 ounces of gold, 450,000 ounces of gold. That is a gold equivalent. 20%, 22% of that is silver. But Séguéla contributes this year between 60 and 75,000 ounces of gold at an all-in sustaining cost in a range of $880 to $1,080 per ounce, all-in sustaining, right? So Séguéla starts contributing with very good margins in the second half of 2023.
Sounds really good. And also your exploration progress is continuing. You reported infill results from the Sunbird deposit, 10 grams over 21.7 meters, 15 grams over 14 meters. So that continues to build your confidence into this resource. And what's the plan there to include this into the mine plan shortly?
Yes, and I think it's good to give your audience a quick reminder of what Sunbird means to Séguéla, right? The Séguéla reserves, as we look at them today, are composed of 5 mineral deposits that host reserves. These are Antena, Ancien, Agouti, Boulder, and Kula. Those 5 deposits hold the reserves that we currently have in our mine plans. Sunbird is a new and 6th deposit, but today we only have resources at Sunbird. We have had a lot of exploration success. Sunbird didn't really exist 2 years ago, right? It's a new discovery, and it's been evolving and growing nicely. Today, we have at Sunbird, in the measured and indicated category, about 280,000 ounces of gold, plus in the inferred category, 500,000 ounces of gold. So what we're doing today is infill drilling those inferred resources, and even doing some further drilling in the indicated resources, so we can upgrade those ounces to reserves, with the aim of inputting them into our mine plan this year. No? So we have the optionality or the opportunity to bring 750,000 ounces of gold additionally to our mine plans in 2023. And that's something that is not in the numbers. It's not in our production schedules. It's not part of our view of the cash flows of the business. That's work that's taking place now. Sunbird remains open on at least 2 to 3 directions. We are going to start trading off also underground mining opportunities for the deeper portions of the deposit. One of these results that you indicated extends mineralization further to the north, where mineralization again remains open. So it's open to the north at depth. It's very exciting. And the entire property package, really, no? We have over 30 targets that we still need to get to, no? So there's years of work on the exploration front at Séguéla.
We discussed this in the past. That speaks also for an extension of your current operation, and it's a whole mining camp to be developed. I think you will be there for decades. Resources and reserves, Jorge, that was a keyword. You also gave a press release with the company-wide reserves and resources. Here we have the table in another press release, and we have a decrease in the reserves proven and probable and increases in the resources of the different categories. What is your focus for this year? Extend the reserves again or upgrade, as you just said, the inferred to measured and indicated?
Yes, and again, for the benefit of your audience, when you look at companies' reserves and resource inventory, both reserves and resources need to be viewed and analyzed together in context, right? Yes, we saw a 14% decrease in reserves and of gold, and a 22% decrease in silver reserves. But look at what happens with our resources, or measured indicated resources, and our inferred resources, right? We saw in the case of gold, in the measured and indicated resources for gold, an expansion of 32%. And if we look at gold in the inferred resource category, we saw expansions of 39%. Where do you feed reserves from? Well, from your measured, indicated, and inferred resources, right? So I am not concerned at all about a 1 year decrease or a 14% decrease in reserves for gold if I have a robust, healthy resources behind for conversion. As we were just talking, we're drilling for conversion at Sunbird today, roughly 750,000 ounces that where we have the opportunity to bring those ounces to reserves. So if you have a shrinkage of reserves without resources behind that, well, that's a concern. In our particular case, we have a healthy pipeline of resources behind the reserves, so it's not a concern to me. In fact, I see these numbers as very positive. In the case of silver, we are seeing a decrease of our silver reserves, and we are not have been able to expand our silver resources in any meaningful way. So yes, we are currently depleting silver resources. We continue drilling, exploring. In fact, one of the drivers for the non-cash impairment charge was all the investment in exploration at our silver mine in Mexico that we've been accumulating, right? So last year, out of 12 drill rigs, 8 were allocated to drilling silver targets. We just, haven't had a luck with the drill bit on the silver side of the business. On the gold side of the business, we've been quite successful.
Jorge, thank you for the update. With the currently high numbers for gold and silver, the quarter is nearly done now. I expect really good numbers for the first quarter. Do you have some interesting information for us already?
Without getting into trouble for this, what I can say is that, we had a good start of the year. And as we discussed, that we've been publishing, what's more relevant is the construction of the new mine, which is going so well. And at the other assets, it has been business as usual. No, I think you can count that, our business is running according to guided projections, right? Mining is a natural hedge against inflation. That's a general view of our business. But for 2021 and 2022, we have been selling gold and silver at either flat or lower prices in 2022 with respect to 2021. And our margins have been eaten by inflation. So the entire industry has seen margin compression in 2022 with respect to 2021. So that hedge has not materialized because, you know, we've been selling at the same price with margin compression due to inflation. It's now that we're seeing some relief on the surge in prices. And our business, as we discussed, generates healthy free cash flow at more conservative price environments. But we are all certainly looking forward to see the price of gold and investors' attitude towards gold evolves in these turbulent times, right?
I'm pretty confident, Jorge, that we will see big moves shortly and overnight everything will change. Thanks for the update. Have a good day in Florida and until next time, saludos. Bye bye.
See you, John. See you.
Thank you. Bye.